Hi, I'm Tom Basso, retired investment advisor, commodity trading advisor, and currency trader. In today's piece, we're going to talk about increasing your net worth to protect your net wealth. Most investors would ask me, net worth, net wealth, sounds like the same thing. It most certainly is not. Let's take a look at net worth. First, you'd have to list what you own, like cash, investments, house, a car. These are called your assets. Next, you add up what you owe others. In this simple example, it would be things like credit card debt, a home mortgage, maybe an auto lease, and any other loans. That would be called your liabilities. If you take all that you own and subtract from that the amount that you owe others, you get your net worth. Let's move on to net wealth. Net wealth is what you can buy with your net worth at any point in time. Simply put, if you have $1 million net worth today, you have the net wealth to theoretically go out and buy $1 million worth of goods and services. So at this moment in time, net worth and net wealth are exactly the same thing. But what happens as time moves on? Let's take a look at the US dollar's purchasing power over the last 100 years. $1 in 1913 would be worth around 4.6 cents today in what it can buy in goods and services. Put another way, you'd have to pay around 20 times as much for things as you would back in 1913, all things being equal. Let's look at the price of gas over the last 80 years. The price of gas has risen a great deal from less than 20 cents a gallon to around $3.50 a gallon, depending on where you are in the country. Meanwhile, if we look at the dollar-adjusted view of gas prices, which is the green line, prices haven't changed all that much. It simply takes more increasingly worthless dollars to buy the same amount of gas. On this next graph, I've shown the price of 1 pound of ground chuck beef rising against the purchasing power of the dollar declining. As you can see, as the value of the dollar declines, you have to pay more of them to buy the same amount of beef. With all the quantitative easings going on from the Fed and all the spending in Washington, each dollar in the United States is going to be worth a little bit less in the future. What this means to investors, you can no longer sit back and expect your net worth to pay for the lifestyle you've grown accustomed to. This also means that you're going to have to increase your net worth in the future to protect your net wealth and your purchasing power or face a lower standard of living. I'm Tom Basso, hoping to help keep you from becoming a frustrated investor. Enjoy the ride.